Hey everyone, Jeff Dorman, CIO at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset market. And I'm happy to be joined this week by Patryk Krasnicki, who's a senior research analyst at Messari. Patryk, thank you for joining.
Thanks for having me, Jeff.
Yeah, so before we get started, as always, quick disclaimer, nothing here intended for investment advice, but we are going to talk about what's happening in the markets as we do every week. For those who like to read too, you can go to our website, ar.ca/blog, and read That's Our Two Satoshis, where, of course, we talked about post-election. I don't know about you, Patryk, but this was a pretty exciting week for crypto investing. Um, it's almost anticlimactic, I guess, a little bit in the sense that we've been talking about potentially what this might mean for crypto for a year and a half now, and then it actually happened, and you saw the crypto prices explode. But I spent a lot of the week just talking to people, just trying to get a feel for what did this mean in terms of what were some of the backlogs or some of the high agenda items that you think are the most beneficial coming out of what is now a certainty. Whereas, again, 6, 9, 12, 18 months ago was just sort of something that the crypto markets talked about.
Yeah, I mean, it was obviously a very big election and decision that was coming up here. When you talk about the next 4 years of an administration and what that might mean for regulation, it's a big deal. Obviously, a Trump win is much more positive, at least on the crypto side. So people are looking forward to what may be coming on the regulation side of things, and maybe a better environment just on the U.S. side for companies that are operating in the crypto space. Maybe some doors open up in terms of what you can do with tokens. So yeah, just overall, next 4 years, quite exciting.
Yeah, let's stay on that in terms of sectors for a second, because I think, again, this was viewed, and for those who don't know, I assume everybody watching this knows, but not only did Trump win, but you had, the Republicans gaining on the House and the Senate. You certainly had a lot of crypto money impacting some of the decisions. I think there was roughly $245 million raised from crypto PACs supporting, I think, 48 candidates, and all 48 of those candidates won their respective races. So again, this is more than just Trump. And I think the other thing that's important to note is even though Trump made a lot of promises with regard to what he might do with regard to crypto, there's still a lot of uncertainties as well, right? We're sort of in that honeymoon period where it's like assume that Gary Gensler will be out as SEC chairman. We know Sherrod Brown is out, Ohio senator, who is largely responsible for a lot of the banking issues that the crypto industry has. So there's some certainties like that, but there's still a lot of uncertainties, right? We don't know yet who's going to be the SEC chair. We don't know yet exactly how much of this Trump will follow through on, and whether or not you'll actually get crypto legislation in a year, 2 years, 4 years. That being said, it's clear that you can see from some of the market reactions just how much of the market felt like it had a foot on its neck, meaning like you could go if you think about the crypto markets as being fully restricted by governments to somewhat neutral to optimistic to full-blown real crypto policy that's positive for the industry. We were in restrictive territory for a long time. Maybe it loosened up to neutral in the last 6 months when you got the Bitcoin ETFs through and you started to see a little bit of a mea culpa from some of the Democrats in terms of their hostility towards crypto. Now we're in that optimism phase where we hope there's a lot of change happening, but it's going to take some time for actual change. But that being said, what I want to ask you about is that just that optimism alone, even if there's not actual crypto legislation yet and there's not a lot of clear rules, there's always been innovative tech companies in the history of America that have been on the ask for forgiveness rather than permission cycle and felt like they could take chances and risk some things until something stops that progress, right? And I think that's where crypto really went wrong in the last 2 to 3 years, is that innovators stopped innovating because they were scared. They were scared of going to jail or getting massive fines or having this regulation by enforcement pop up. Do you think optimism alone is enough to start seeing some of that innovation again? And are there certain sectors where you think that that's more obvious to happen than others?
Yeah, a lot of things I want to jump into. First, just stepping back into the results here. So Coinbase did a great job covering the election and kind of differentiating into buckets of pro-crypto and anti-crypto. So House of Representatives, 271 pro-crypto candidates elected versus 122 anti-crypto, and then 19 pro-crypto in the Senate, 12 anti-crypto. And then obviously the presidential leans towards being more crypto forward as well. So That's a positive. Obviously, we're still months away from any inauguration, and then it's still going to take time after that to introduce bills and get them passed and pushed forward. So there's definitely been excitement in the markets here post having some clarity of where the election landed, but it's still going to take time. As to your question, I think we're seeing some of that innovation, or I don't know if innovation or strategy already come into play with some tokens introducing proposals and talking about fee switches. That's been something that historically has been a touchy subject with the SEC, Gary Gensler, some potential securities type actions there, depending how you implement those fee switches or revenue.
I'll go even further than that. I'll say that a lot of the meme coins and a lot of the useless sort of governance tokens that have emerged in the last 2 years were directly related to the fact that the good businesses out there that have real revenues and have real cash flows and have real ability to turn some sort of value accrual to their tokens have just decided not to do it for fear of punishment. And as a result, the market has been almost forced to gravitate towards the nonsense. And I think this is opening the door for the real businesses, the real companies to start thinking again about, oh, I actually want to be a fiduciary to my token holders. I actually want to, pay them back in some way, whether that's through dividends or through buybacks or some other form of financial value. And I think that's a huge thing. Again, even if we don't get regulation right away, just the fear of being punished for those kind of actions going away could launch a whole, a wave of, like you said, not necessarily innovation, but strategy on the tokenomics side.
Yeah, and we're already seeing that. Jito on Solana is one. There was a proposal or form discussion that came out of distributing revenue to a treasury. There was a Blur crypto or NFT marketplace that also introduced that over the weekend. So already within a week, we're seeing protocols be more aggressive on that side. And then Uniswap, like long fabled fee switch there. The price action for the Uni token was quite speculative, just with that being a maybe increased likelihood. So yeah, definitely seeing traction there. And one thing I've heard people talk about on the governance side is we might see more activist investor type action with, now there's large token holders and maybe they can collaborate to push kind of a proposal that implements some kind of fee switch. So maybe more of that as well.
Yeah, and from a market standpoint, I mean, investors are ahead of this in the sense that the immediate reaction, as if you were watching Polymarket odds, just like we were live on election night, as you started to see more and more confidence that you were getting, not just a Trump victory, but across other Senate and House races, you started to see DeFi being the first sector to really shoot higher. And again, that's because there is clearly some inherent value that has been left on the table in some of these projects because of the inability to distribute that value back to token holders. And the market is starting to get ahead of that, saying, well, okay, well, now we want to start buying those tokens again that could produce some of that value. And I think another way to think about too is like, Coinbase is up about $40 billion in market cap in the last week plus, right? I guess it's exactly a week now. 5 or 6 trading days, 40 billion. The overall crypto equity is up about 100 billion. The overall crypto market cap, I think, up about 400 billion. So $500 billion of value was effectively unlocked with higher multiples just because of, again, this sort of foot being taken off the neck or the throat of the crypto industry. We haven't even seen any actual change yet, but just this perception that you're no longer going to be fined or jailed for innovation and for doing what's right for crypto businesses. I mean, that's a huge number, right? And again, we called it out in May. We said that the Democrats made probably the biggest miscalculation ever, in the sense that there's 60 million Americans who own crypto, and there's maybe 10 people total who hate crypto enough to vote on behalf of an anti-crypto platform. So, I mean, these are just staggering numbers. I mean, $500 billion of value unlocked in a week just because of this change. So I think, again, the markets definitely agree with what you're saying.
Yeah, definitely quite staggering. The anti-crypto army didn't work out. The strategy failed for sure. But I'm looking at some ETF inflows for Bitcoin and Ethereum, and they had the largest days on record so far in this week prior. So looking at $300 million into Bitcoin ETFs. And then Ethereum's making a comeback as well. Some billions of dollars there. So sorry, I think I had them flipped. Bitcoin was in the billions, Ethereum in the couple of hundred millions. So definitely big days there. And we're seeing Ethereum kind of come back as well. Obviously, it hasn't done too well when you open up the ETH BTC chart, but it reached quite a low level that hadn't been seen since, I think, 2021 or something like that. And we're seeing a resurgence now. We'll see if that continues, but it seems like people are starting to get excited about Ethereum as well.
Yeah, I mean, this is something too that we've at ARCA with the various funds that we run, we talk to LPs all the time. Obviously, there's plenty of other firms out there, not research firms like Messari, as well as other fund managers who, no matter what you ask people over the last 7+ years about crypto, there's always a reason from traditional investors on why they wouldn't invest, and most of those have been debunked over the last 7 years. Everything from we don't understand it, or it's not safe, or there's not custody, or it doesn't have value. The only one that hadn't been debunked was the fact that there was regulatory concerns and uncertainty. In fact, Bitwise, who talks to financial advisors, that manage $30 trillion or so, they did a survey every year, and every year for the last 6 years, the number one reason that they got for not investing in the space was regulatory concerns. I mean, 60% of investors in 2021, 65% in 22, 64% in 2023. I mean, there isn't even a close second in terms of reasons why people wouldn't invest in crypto. So, that's a huge lift. And you're mentioning the Bitcoin and ETH ETF flows. This is not crypto native people who ape into $10 or $20 million in a day and then call it and then are done. These are institutions that if they start buying, they buy for 3 to 6 months. I mean, they're constantly allocating and TWAPing, and you can see it just in the bid for Bitcoin in the last 7 days. I mean, every time it even tries to dip, it's immediately bought up again. So these are constant flows that I think come out of something like this that doesn't really stop. It might stop for a day or two or a week or two, but I mean, this is a trend that can really accelerate over 6 to 24 months of new buyers finally just saying, I have no more excuses for why I'm not buying this stuff.
Yeah, definitely opened up a lot of doors with the ETFs coming out. I mean, we saw that early on with Bitcoin. And yeah, now you have traditional finance folks that are able to sell this as a product. So that's a big door that opens just in terms of accessibility. And then, into 2025, it'll be interesting to see if any other ETFs come out. Sol has been speculated as being the next one. We'll see if that happens. It could take a while. Bitcoin and Ethereum were definitely the top 2 assets, maybe an easier sell than some of these other ones. But crypto moves so fast that I also wouldn't be surprised if Sol and several others were approved. And maybe there's a basket, kind of like an S&P 500 type product sometime next year. We saw Coinbase just a few hours ago announce a basket of the top 50 crypto assets that are going to be you can trade them for perpetual futures. So maybe an ETF, something like that is on the table too.
So, the ETFs are always a double-edged sword. It's obviously positive that it's opening the door for new investors to put money into crypto. It's also a negative in the sense that, obviously we have this amazing real-time settlement asset, and ideally you want financial assets to come on-chain, not on-chain assets to go off-chain. With crypto specific, I mean, are there any other, you mentioned DeFi already and some of the tokenomics around fee switches and cash flows, but is there anything else from a crypto specific standpoint that you think there's a real sort of sector narrative change here or a reaction to the election that investors should be looking at, and that you think 12 months, 18 months from now might be a no-brainer as a result of some of the changes that we're expecting here on the regulatory and political front?
Yeah, I'm not sure if this is a direct result of the election and some of the changes there, but I've definitely been seeing a change in narrative between applications versus networks or blockchains, and kind of how much revenue is being generated on the application side versus on the blockchain side. And applications are starting to earn a much higher percentage share of revenues or fees generated. So I think that will continue as the crypto asset class matures, and so do these applications. They go a little bit further from being more of early stage startups into being these more mature products that are able to have high profit margins, very low expenses. So yeah, some of these applications are really starting to earn a lot of revenues.
I'll even take that one step further. You mentioned, the crypto asset class. I'm not even sure crypto is an asset class. I think in 20 years, every asset class will be traded on crypto rails, and it'll be like right now we view crypto as an asset class because if you're a crypto fund manager, you're basically segregated from the outside world, right? You're using different banks, you're using different ways to transfer money. You've got different custodians. I mean, we at Arca, for example, trade both regular traditional securities, stocks and bonds, as well as tokens, and it's completely kind of segregated the way we move these things, which is why I think most investors think of it as a separate asset class. The reality is, again, in 5-10 years, maybe sooner, you're going to be trading your stocks on chain. You're going to be trading bonds on chain. You're going to be trading everything on chain, real estate, commodities, currencies, et cetera. Some of that already exists today. So again, I'm not 100% sure it is an asset class. I think it's more like a technology that houses all asset classes. And the reason I'm bringing that up is that if you use the internet analogy to crypto in terms of adoption, even though there's plenty of crypto or internet native companies that still exist, right? Your Amazon.coms, your Priceline.coms, companies that literally would not have existed if not for the internet. And then because of the internet became these profitable businesses. There's 100x more traditional companies that already existed before the internet that figured out how to use the internet to increase their profits and increase their customer adoption, right? Walmart is an internet company now. JP Morgan's an internet company. Domino's Pizza is an internet company, right? All these different companies that, again, existed long before the internet, adapted and became better companies because of the internet. I think that's the next wave post this political and regulatory shift, is that there's undoubtedly a lot of traditional companies out there who wanted to do more with blockchain, who maybe wanted to issue a token, who wanted to find unique ways to use crypto and haven't been able to do it, largely because they were hiding behind this, there's no rules and it's not worth killing our legacy business just to enhance a small part of our business that may or may not work. I think you're going to start seeing that coming out of the woodwork soon. And maybe that means more tokens to trade. Maybe it's just more businesses that are traditional public companies or private companies that have a crypto native wing. I even saw a tweet from someone the other day from someone who said, I'll be raising a private equity fund to acquire traditional businesses that can benefit from business model transformations by adopting crypto mechanisms, right? I think that's the next wave. I think that's what's really going to usher in millions, if not billions, of crypto users, right? It's nice to have a crypto native game, for example, and try to hope you build the next Fortnite or Roblox and it has 100 million users. It's a lot easier to take an existing Fortnite or Roblox that already has 100 million users and give them crypto mechanisms and crypto rails to their existing users. So have you thought about that at all? Have you thought about kind of other use cases or where the next wave of crypto growth comes from, in addition to just sort of DeFi, gaming, AI, or some of the sectors we're already seeing?
Yeah. To some of your initial points, I would separate crypto and blockchain. What you're saying is exciting on the blockchain front, gaining more usage, more companies doing things on chain. But then I think there's that crypto component where if there is a token that's used for and derives value through a variety of different means, I think there you get into the different type of asset class potentially based on what this token is doing and used for. But yeah, it's exciting. I mean, Meta shifted their strategy entirely towards the metaverse a few years ago, and that was met with a lot of skepticism, and now it's kind of working out for them. They're making a lot of strides, and I could definitely see some other companies maybe not shifting their entire strategy to blockchain, but just getting more involved. And if you have some of these larger companies that make that commitment and start putting, capital and manpower to develop new products, useful things that are happening on chain, I think that could definitely drive some further adoption. And these bigger companies could come up with some cool, useful things.
Yeah, and I think to your point about separating crypto and blockchain, like if 100 Web 2 companies just all of a sudden start using blockchain in some way, shape, or form, that will benefit parts of the crypto ecosystem. It'll benefit some of the layer 1 protocols. It might benefit some of the stable coins. It might benefit some, crypto rails businesses that can help facilitate some of that. But if you see some of these companies actually issue their token, then it also is a new crypto token that you can trade around. Like, again, imagine if Netflix issues a token where that token gets 10% of Netflix's top line revenue dividended back to the token. but that token also is used to pay your monthly fee, your monthly subscription costs, and maybe you get a 20% discount if you use the token. Maybe if you have a token, you're able to access the last season of a hot show 2 days before someone else or whatever. I mean, there's all kinds of innovative ways that existing companies can use a token. And I just mentioned Netflix, but I mean, easily you could see how that same kind of a model could work for United Airlines or Disney or, you name it, right? There's all kinds of different ways that a token could be introduced to the capital structure of an existing business. Not to mention all kinds of, universities getting rid of some of their, booster programs and instead issue a token that maybe the token is how you fund your donations to a university, but maybe you can use that token to redeem for tuition when your kids are older, or a municipality like New York City who issues a token, and that token can be, used to give you fast access at LaGuardia and JFK, and maybe a discount on the subway, and maybe your kid's birthday party in Central Park. I mean, there's so many different ways that these companies and institutions and businesses can utilize a token. Not to mention like local bodegas and hair salons and gyms. I mean, there's so many different applications here, and that's, I think, what I'm most excited for. Is I feel like we've sort of been in this binary environment for the last 4 years of, will they ever loosen the strings enough to let that innovation fly? And we might be there in the next year or two now.
Yeah, when Netflix layer 2, all that stuff is exciting, and that's why we're in crypto. Just infinite possibilities, and yeah, it's exciting stuff. I think right now it's some of these more financial oriented institutions that are first coming on chain. You're seeing that with BlackRock, with Kraken, Coinbase. I was just at a panel with Fidelity. They were talking about the design space of layer 2s and what goes into launching your own chain. So maybe they come out with one here in 2025 and then kind of lead the path for some of these other sectors to start coming more on chain. So yeah, and consumer is an exciting space. I'm seeing more and more excitement, especially from the young generation, students and such that are excited about the consumer side of things.
Perfect. All right, Patrick, well, I think we're bumping up on time. Where can people learn more about you and Messari and some of the things you're working on?
Yeah, so on Twitter would be great. It's at SoloFunk30. And of course, you can go on Messari.io to learn more about Messari.
Well, I certainly recommend everyone get on the Messari website and subscribe if you can, and get some of the great research and analytics and dashboards that they have there. And of course, you can find me at jdorman81. You can certainly go on our website, ar.ca, and read the blog. That's our 2 Satoshis, as well as some of the other resources we have. And we'll be back again next week. So Patrick, again, thank you for joining. And everyone else, thank you for listening, and we'll see you soon.
Thank you.